Hey there everyone, welcome back to my channel. If you've been thinking about buying a home but don't know where to start, you're in the right place. Today we'll talk about home purchase tips and mortgage strategies for beginners. Everything from saving for a down payment to choosing the right mortgage. Let's jump right in. First, let's talk about why you might want to buy a home. Building equity. Every mortgage payment can increase your ownership stake in the property, which can grow your net worth over time. Stability. Owning a home can provide a sense of security, no sudden rent hikes or landlord changes. Potential tax benefits. Depending on where you live, mortgage interest and property taxes may be tax deductible. Freedom to customize. It's your home, so you can renovate and decorate however you like, within local regulations. Of course, buying a home is a big commitment, so it's important to be financially prepared and plan carefully. Before you start looking at houses, prepare your finances. Here's what that involves. Save for a down payment. Aim for at least 5 to 10% of the purchase price. If you can manage 20%, you'll avoid paying private mortgage insurance, PMI, in many cases. Check your credit score. A higher score usually means better interest rates. Aim for 700 plus, but you can still qualify with lower scores. Just expect higher rates or specific programs. Create a budget. Calculate how much you can comfortably afford each month. Include mortgage, taxes, insurance, and maintenance costs. Don't forget about utilities, HOA fees, if applicable, and any other living expenses. Next up, let's talk about mortgages. Principal, the amount you borrow. Interest, the cost you pay the lender for borrowing money, usually stated as an annual percentage rate, APR. Term, the number of years you'll be paying off the loan, often 15 or 30 years. There are many types of mortgages, but two common ones are fixed rate mortgage. The interest rate stays the same for the entire term, so your monthly payments don't change. Adjustable rate mortgage, ARM. The rate can change after an initial fixed period, which can lower your initial payments but carry risk later. Before you start house hunting, it's smart to get pre-approved for a mortgage. This involves giving a lender information about your income, assets, and debts. They'll let you know how much they're willing to lend you. This helps in two ways. Sets your budget. You won't waste time looking at homes outside your price range. Strengthens your offer. Sellers and real estate agents take you more seriously because you've shown you can secure financing. Just remember, pre-approval isn't the same as final approval. You'll still need to go through the formal underwriting process once you find a home. Now comes the fun part, actually looking for a home. Here are a few tips. Define your must-haves. How many bedrooms, bathrooms, and any specific location features. Neighborhood research. Look at school districts, crime rates, and commute times. Walk around the area or visit at different times of day. Compare prices. Ask your real estate agent for comparable sales, often called comps, to gauge if a listing is fairly priced. Don't skip the inspection. Always get a professional home inspection to uncover potential issues before you commit. Keep in mind, you want a home you'll be happy in, not just for now, but for at least the next 5 to 7 years if possible. Let's talk about some mortgage strategies to help you save money in the long run. Choose a shorter term, if possible. A 15-year mortgage often has a lower interest rate than a 30-year one. Although the monthly payments are higher, you'll pay much less interest overall. Refinancing. Later, if interest rates fall or your credit score improves, you can refinance to get a lower rate. This can lower your monthly payment or shorten your loan term. Bi-weekly payments. Instead of one monthly payment, make half payments every 2 weeks. This results in 26 half payments a year, which is 13 full payments instead of 12. You'll pay off your mortgage faster and reduce the total interest. Buying discount points. Some lenders allow you to pay extra upfront, called points, to get a lower interest rate over the life of the loan. This can be beneficial if you plan to stay in the home for a long time. Even with a solid strategy, it's easy to fall into common mistakes. Overbuying. Don't stretch your finances too thin by getting approved for a bigger mortgage than you can handle. Skipping the inspection. Any unseen structural or system problems can cost thousands later. Ignoring closing costs. Budget for appraisal fees, title insurance, escrow fees, and other closing expenses. These can add up quickly. Not shopping around for rates. Compare at least 3-4 lenders to find the best deal. Forgetting an emergency fund? Maintain a safety net for repairs or unexpected expenses so you aren't forced into debt. And that's a wrap on our home purchase tips and mortgage strategies for beginners. Buying a home can be one of the most exciting and sometimes stressful experiences. But with the right preparation and a solid plan, you can make smart decisions and save a lot of money along the way. If you found this video helpful, hit the like button, share it with anyone who's thinking about buying a home, and don't forget to subscribe for more personal finance and real estate tips. Thanks for watching, and I'll see you in the next video.